for the foreseeable, for sure. I'm also calling from Liverpool, which is the apparently the epicenter. So you may want to put your masks on if you're not wearing them already. For Shilpen.
Well, as Paul says, it feels like a long time ago that we last sort of looked at this topic, and an awful lot has happened since then. Most of you probably know that the furlough scheme and other government schemes have either ended or are about to end, this really does throw the focus on kind of what new measures there are to try and support the economy. There's no doubt, I would say, that we do need the support, because I mean, just this morning I woke up to the news, and you may have seen the same thing, that we've got the UK unemployment rate is at the highest in 3 years, and the growth in redundancies is at its highest rate since 2009. Perhaps it's not unsurprising, but I think it does underline just how much we actually do need, government support at this key time, especially as exactly as Paul says, given the local lockdowns. I mean, we are clearly facing a fairly gloomy stretch ahead, more important than ever is we're going to need this assistance. Paul, I think you're going to tackle the job support scheme, the big one.
Absolutely, yes, absolutely. So the government, kept kept this a bit last minute. It was introduced the back end of September. The objective of the job support scheme, the JSS, is to safeguard viable jobs in businesses that are going to be impacted by the pandemic over the winter. So there's a kind of conceptual difference to the furlough scheme, because the furlough scheme was just designed to save jobs, full stop, whereas the key point of the JSS is that it's geared towards saving viable jobs. It's a fast-moving situation, and I guess anyone who had experience of claiming under the furlough scheme will know that that definitely evolved. New guidance comes out. The government are obviously trying to react to a situation that is evolving, and so inevitably the rules will evolve and move with it. As well as that, we have big things happening like the local lockdowns, and there's a local lockdown extension to the JSS which came through recently as well. So it's a moving target, and certainly one to we'll have to stay on top of the rules as they come out. So Shilpen is now going to talk about the practical scheme itself.
Yeah, I mean, exactly as Paul says, the emphasis has changed from, as the name suggested, the previous coronavirus job retention scheme, which was really aimed at stemming the panic and just kind of making sure that employers were able to stabilize their businesses when nothing else was stable. And that was very much the kind of intention behind that program. This is intended to be a much more business-like support mechanism, where the job needs to be viable in the first place, and that can be seen in the extent to which employers still have to back this scheme, basically, and they are by far paying the lion's share if they want to be part of this scheme, and that's a big difference between this and the CJRS. It's intended to encourage short working hours rather than redundancies, and I think that reflects a wider conceptual change in terms of the workplace and a recognition of the changes that are happening around us, and in truth were happening before the virus arrived. Because well, it's partly modeled on what's been happening in Germany for a while as well. They've been job sharing for a while there with the active support of government. And the idea there again is that it's better to be able to save jobs through reduced working than to just lose jobs which may never come back, with the sort of consequential loss of skills, etc. So the government isn't talking about this, but there is a conceptual aspect to this, which I think will have a longer term impact. And it also suggests to me that this scheme may end up being there for a longer term, actually. It will offer only slightly lower income protection from the employee's perspective, but it's a far lesser burden on government, which is again partly why I think it's got more longevity. I mean, by comparison, the furlough scheme really involved a government contribution of up to 60%, subject to a cap. And in this scenario, the government will pay about 22%. So it's a very different kind of support, but yet quite important because it is there and it's intended to provide something of a safety net. The key requirements are that an employee must work and be paid for a minimum of 1/3 of their usual hours. And that has to be the case for the first 3 months of the scheme. The government will then consider whether to increase this threshold or to make modifications. As I say, my personal expectation is I think this scheme is here to stay, and we'll see it in the long term, in the same way as I think they've done in Germany. It's been there for a long time, and it's become a regular aspect of their government support. Paul, I think over to you. You're going to look more closely at who's covered.
Yeah, thanks, Shilpen. So from an employer's perspective, the scheme is open to employers throughout the UK, as long as you've got a UK bank account and the UK PAYE scheme, and it doesn't matter if you use the furlough scheme or not. I guess the key point from an employer's perspective is that this seems to be really geared towards SMEs. So SMEs in any sector, there's no economic test at all. As long as you hit the requirements, you can access it. For larger companies, there's going to be a financial assessment, which hasn't been published yet, so that will follow. But there will be a financial assessment, and there will also be restrictions on other things that large companies can do. So, for example, it's expected that they won't be able to make payouts to dividends, and I guess this is because I think it may have been EasyJet, but there was stories around the time when the furlough scheme was coming in that companies were claiming the money from the furlough scheme and then making payments out to shareholders. So that's expected to be prohibited. In terms of what's an SME, this isn't defined yet, so this will follow, but previously it's been defined as a business with less than 250 employees. So that's the expectation, is that will be the same for this scheme. From an employee's perspective, a bit like the furlough scheme, really, it's quite wide. We don't, the scheme doesn't go into any of the finer sort of complicated points about employment status or worker status. The simple rule is that you have to be on your employer's PAYE payroll and an RTI notification to HMRC on or before the 23rd of September. So it doesn't matter if you're an employee or a worker, as long as you're on the payroll and there's been an RTI submission on or before the 23rd of September, then you will be covered. Now, there was a thing about cut-off points with the furlough scheme, and that actually got pushed back to late February when there was some kickback. So I don't know if this date of the 23rd of September is going to change, but that's where there's got to be a line. That's where the line is at the moment. I guess the initial view is that if you joined in September, payday may not be until after the 23rd, and if that's the case, then you're not going to be covered for this scheme. There's no requirement that you had to previously have been furloughed, and you don't have to work the same reduced hours pattern each month. The only stipulation is that your short-time working arrangement must cover at least 7 days. There's one point here which I think is going to be, we'll talk about this a bit later on, but I think this is going to be quite an important condition in terms of whether people, businesses are weighing up whether to use it or not, is that employees can't be made redundant or given notice of redundancy during the period in which you're making this claim. So the claim period will be a month, and if you give notice or you make an employee redundant during that month, then you won't be able to recover the government's contribution under this scheme. And again, this is because this is geared towards jobs that are viable. So the logic follows that, if it's viable, it shouldn't be at risk of redundancy. But that is an important consideration, I think, for whether people use it. So that's the employee perspective. Shilpen's now going to talk to you about the employer's perspective.
Thanks, Paul. Yeah, and I mean, I think that is, well, I think that the main message I would say from an employer's perspective is that this is not a, well, one is to follow on from Paul's point, which is it's meant to support credible and viable jobs that employers are still willing to invest in. It's not a freebie. It's not just a prop, basically, to prop up jobs that shouldn't be there. But the other thing is that it's really the least generous of the employment schemes so far, I would say. And it does require employees to work at least a third of their time, as I mentioned already. In terms of true financial value, the maximum contribution from the government is £697.92. So again, it's not a princely sum, and only those who genuinely are trying to save jobs, or I would say transition their workforce in creative ways, are likely to make use of this. As often with these schemes, they become very simple once they're in use, but describing them conceptually until they're in use always seems a little bit complicated. But just to give you perhaps one working example, and a simple one, an employee who's on a monthly salary of say £2,000 a month, but working 50% of the normal working hours, would receive £1,000 from the employer for the hours worked. That is normal remuneration from the employer. But in addition to that, she would receive £333 from the employer and £333 from the government in respect of the unworked hours. And that really is where the government is coming into this. It's almost matched funding for the unworked hours, basically. The employer would be able to claim back that amount from HMRC. Payments are made in arrears, so it'll be a month down the line. Again, that goes to show that it's not something it's not an immediate shot in the arm. Businesses will still need to cover these overheads themselves in the immediate short term. The grant will not cover Class 1 employer national insurance contributions or pension contributions, which remain payable by the employer. One positive, I suppose, is that for those businesses that have transition from the job retention scheme, the furlough scheme, into this, they will still be eligible for the jobs retention bonus, which we'll hear about in a moment. You've heard us say it a few times, and I guess we'll say it a few more times, but it's all about viable jobs. That's the really important message. I would say, if you're an employer, it's important to think of it that way, approach it that way in order to make this work. And if you're advising clients, if you're a professional, that's the first message I would say you've got to convey. And it does not apply, as Paul has already mentioned, where employees are made redundant or being given notice of redundancy. This is very different to the CJRS, again, to the furlough scheme, where, and I always thought it was a real anomaly. I thought it was very strange that the government was willing to support redundancy payments and notice payments at the time. I think they missed a trick there, because it should have been a precondition for claiming the CJRS that you could not trigger any redundancy steps, in my view. But as I say, that's the difference here. You can start a redundancy consultation, but you cannot actually take steps towards redundancy in any formal way. And all of this, of course, throws up the question of, can employees whose employment terminated after the scheme was announced be re-engaged by their previous employer and put on short-time working? In other words, if you were made redundant in the eye of the storm, can you be brought back and qualify for the scheme? The short answer is no. It depends on when you were let go, because you must have been on the payroll by the 23rd of September 2020, and that's the kind of the cutoff point, basically. So it may apply for a sliver of employees, but not for the majority, very sadly, who lost their jobs, in the first phases of the pandemic. Paul, I think over to you now.
Yeah, thanks, Shilpen. So I'm just going to quickly cover the employee's perspective on this. I think from an employee's point of view, if your employer uses the scheme, it will be pretty much the same as a furlough scheme. So if you work a third of your hours, then you will end up being paid 78% of your salary, and that goes up the more hours that you work. So, for example, if you work 50% of your hours, you end up being paid 83% of your salary. So you know, it's around the 80% mark, which is what people were picking up under the furlough scheme. The big question for me is whether employers are going to use it, because I think that the reality is that from an employer's perspective, it's going to be cheaper to put people on reduced hours and just not access the scheme. So you consult and you agree to reduce hours, and they just get paid. Employees get paid, you know, half their pay or a third of their pay, whatever the hours they're working for. And it's also going to be cheaper to well, potentially cheaper to make people redundant. So I'm going to just come on to those points in a bit, but I think that would be my concern. Is I think it's getting on the scheme. If you can get on it from an employee's point of view, it would be around about the same money that people were picking up for furlough. In terms of the self-employed are still not going to be covered by this scheme. So the same situation with the furlough scheme. The government are directing self-employed people towards the self-employed income support scheme, which they have now extended. So there's going to be a further 2 grants for self-employed people, one to cover November to January. That's going to cover 20% of average monthly trading profits capped at just under £2,000. And then the second grant will cover February to April, but the level for that hasn't been set yet. So over to Shilpen, who's going to talk about how you apply under the scheme.
Thanks, Paul. Just to make a comment on that, I agree with you, Paul. I think the biggest question is going to be, will people bother to take this up? And you know, it doesn't have quite the same simplicity or attraction, you know, that the furlough scheme had. And that's why I made the point earlier that I think, you know, it's almost going to need a conceptual shift. You know, it's going to need the sort of employer that says, I believe in trying to, you know, avoid redundancies, and I'm willing to have a little bit of the red tape and the aggro that comes with this in order to access the scheme. And that's why I think it will engender longer term change, because the kind of employer that does this will not immediately come back, I think, to, you know, full-time working for their employees. I think they're more likely to diversify their workforces, you see, which I don't personally think is a bad thing. If you follow the trends of what's happening in the workplace generally, this is actually a very modern a measure, I would say, a mechanism, I would say. Turning to, yeah. Sorry, Paul.
Sorry, I was just going to say, Shield, but I think that's right. I think that there's been some figures put through on someone who's on, say, £17,000 a year. If they are working 2 days a week, it's going to cost their employer 50% more to use the scheme than it would if they were just to simply reduce their hours and not use the scheme. And likewise, it will cost an employer 33% more to employ 2 people working on a job share than it would to just simply make one redundant and then keep the other one. So I think if you're a business, you know, and you and I have been getting, you know, these calls from clients, if you're a business that's on the edge and you need to just cut costs, and that's your primary motive, then financially, I don't think this is going to be the right thing, you know, for you. But if you've got something that's potentially ongoing, you're just suffering a bit of a drop, but you can see a future, then I think that's I think this could be viable.
Well said. I hadn't heard those or read those stats, actually. That's quite concerning, you know. I think it's the extra payload that comes in for the employer for the unworked hours. It's that third that they have to pay, which I think makes it really questions the economics of the whole thing, you know. You know, making the employer pay for the period that is worked, I think, is perfectly reasonable. But, you know, then matching it, you know, the remainder of government funding with further payments for work that isn't undertaken, I don't think it's very realistic. I think we're both on the same page. Well, turning to the mundane practicalities of this scheme that, based on what we've just said, very few people are going to take up. But the scheme will be open from the 1st of November, and the goal for now is for it to be open until the end of April 2021. Claims will be or can be made from December this year. Employers will be paid on a monthly basis in arrears, which, as I mentioned earlier, means the employers are going to have to wait. There's going to be a lag of a month. So not only are you going to have to pay for work that isn't done, but you're going to have to wait a month to actually recover the bit that you are going to recover from the government. Another interesting aspect of this one is that HMRC is going to inform employees directly when they make a payment. And this seems to be a measure that's intended to try and head off some of the concerns around fraud and fraudulent claims, which reared its head very much as part of the furlough scheme. And there's a lot of recoupment going on and a lot of anti-fraud activity happening after the event. Difficulty being the horse has bolted on that aspect. And I think here they're trying to make sure that an employee knows if something has been claimed in their name. And then, of course, there are helplines and there's reporting lines and whistleblowing lines where, you know, things that are claimed fraudulently or dishonestly can be reported. So perhaps there's a point also for employers is to bear in mind that, you know, that there is, you know, an increasing degree of scrutiny for these schemes. The other thing to mention, which is a practical point and was very much there when it came to the furlough as well, is that these are still, you know, it's important to bear in mind that employment law hasn't changed or been modified by these government schemes. And this is a variation of an employment contract. So it is still very important to negotiate a pay reduction with the employees, any reductions of working hours. All of these things will need to be documented and dealt with in a proper manner. Those employers that did this with furlough will know that it's not necessarily the most complicated thing, but it still needs to be squared off if you're going to take advantage of the scheme. You might ask why and what's the downside if you don't. The point being, if you don't, and because employment law has not changed, you're exposing yourself to making unilateral contractual changes, which could constitute a breach of contract, could potentially lead to constructive dismissals, it could lead to claims for unfair dismissal, et cetera, et cetera. So there's a myriad of reasons and a number of reasons why it is important to do it by the book. It's also worth mentioning that where there is, for the very same reasons I just mentioned, if you're going to make variations to 20 or more employees' contracts, you will have to have an eye to collective consultation requirements as well. Again, you know, it does heap more and more, you know, of a burden on the employer in terms of why would you bother doing this at all? I'm afraid, and that is something I think we'll see being ironed out as the scheme matures. Paul, I know you're going to look at some more room for improvement as well.
Yeah, sure. And I think, you know, in terms of room for improvement, you know, obviously there are issues with this, and I guess you've got to bear in mind it's such a difficult situation, you know, for the government. You know, the reality is that they can't continue to fund the country as they did with the furlough schemes, and it's just not possible. And it's very difficult to roll these schemes out. And I think, you know, with the furlough scheme, it wasn't perfect, but I think you look back and say that pretty much it did the job, and there were changes, and you know, the government did react, you know, as the scheme evolved. So I'm not, you know, you're conscious of just sort of picking up all the negatives with this, but you know, that said, I think there are a few key points that will be a big factor for businesses, and the first one is that this point about the prohibitive costs. You know, the simple fact is that it's going to be cheaper just to simply, if you want someone to work 50% of their hours, just put them on 50% of their hours and give them 50% of their pay. That will be cheaper. Now, you know, whether people accept that or not, and it will affect morale and everything else, because there is a bigger picture to it, but on that pure financial analysis, that would be cheaper. And likewise, you know, potentially the redundancy route may also be cheaper. So I think that will be a big factor for people. You can't access the scheme if you're thinking about making redundancies. So I think if any business is uncertain about how things are going to be over the next few months, which surely has got to be a lot of businesses with this, you know, the 3 tiers scheme now coming in, and who knows kind of what level of lockdown is around the corner. It's not always possible to plan that far ahead, and I think that could be something that puts people off. We've got the cash flow point, which Shilpen mentioned. So whereas with furlough, you could defer payment to staff until you got the money back in from the government. That's not going to happen now. You need to make the payments, and then you get the payments, and you'll probably be working on a month lag to get that in. And then the final thing, I guess, for me is I just wonder if the scheme has been announced a little bit too late. You know, the government up until pretty much the announcement was saying, you know, when the furlough scheme ends, you know, that's it. And certainly, you know, I've advised loads of businesses that have planned on that basis. And so I think a lot of companies will already have made those redundancies, anticipating what's going to happen when the furlough scheme ends. And you wonder if people that had known that this was going to be in place, whether that may have impacted upon their planning. But anyway, that it is what it is. You know, I just wonder. I think maybe a bit more notice could have perhaps saved some redundancies from happening. And just the final point, because I know this is you know, an ongoing headache now, particularly as things are a bit more uncertain, is this doesn't deal at all with what happens if people are shielding or if people can't come to work because of health problems. Obviously, under the furlough scheme, if someone was shielding, you could put them on furlough and recover the money from the government, whereas there's no criteria here about, you know, you can be put on the scheme if you're shielding. In fact, you can't, because you have to be in work for at least a third of your hours. So it doesn't address that issue. Shilpen, are you going to talk now about the recent extensions for the local lockdowns?
But just before doing that, one more observation in terms of why. I mean, I think the government has really missed a trick on this in terms of it being this. I mean, I think it's a great program actually in the longer term. I think it's a great program as a standalone program. I think it's not a great program as an alternative to furlough. I just don't think it's anything like, you know, like for like, basically, or even something comparable. In its very nature, it's a different beast. But they could have dealt with the problem that Paul just identified, which is that it's come quite late, and, you know, a lot of employers have made their decisions faced with what they had basically in front of them. They could have fixed that to an extent by not having such a short cutoff point. So I just mentioned earlier on that the 23rd of September is the eligibility date. I don't see why that couldn't have gone way back to even the start of the furlough scheme, potentially, because it would only apply to those employers that would fit the scheme, basically, or at least go back a bit further, which would have allowed those who were dismissed over that period to be brought back in if needed. I mean, as Paul and I both know from being at the coalface, there were so many redundancies being made, even with the furlough in place, you know, because some employers just wanted certainty. They wanted to be able to plan ahead, knowing exactly what their cash flow was, and not to be lurching from month to month, waiting for the next government handout. And I must say that, you know, I think there's a lot of sense in that, a good sense in that, which is very sad from the point of view of a lot of employees who've been pushed out, asking why they were being pushed out despite the government scheme. And so it's pretty nasty out there, as you might imagine, I must say. On that note, and on a more positive note, the lockdown job support scheme, again, has been a long time coming. But the fact that it's there now is I think very good, especially, I mean, given the announcements made yesterday, and Paul's point earlier on about how Liverpool finds itself, you know, literally, you know, at the centre of this right now. This scheme arguably is the most generous scheme so far, because in this scenario, the government will pay up to 67% of lost income, and it genuinely is intended to deal with sort of emergency sort of support when it's needed. It applies to any business required to close their premises due to local or national coronavirus restrictions. And in that situation, the government will pay 2/3 of their employees' salaries, up to a maximum of £2,100 a month. And employers will only be asked to cover national insurance contributions and pension contributions. In order to be eligible, employees must be off work for a minimum of 7 consecutive days. And that's one of the requirements. The scheme begins on the 1st of November and will be available for 6 months, with a review point in January. Employees of the firm that have been legally closed in the period before the 1st of November will still remain eligible for the original furlough scheme. I mean, this is a scheme that seems to have been concocted slightly in haste. The government was adamant that they didn't want to just extend the furlough, and hence they've come up with a furlough by a different name. I worry about that just because I think the more red tape that's generated in this way means it's that much harder for people to actually access it. And the furlough, in truth, was, I think, a roaring success. It was really, really arrived at the right time, kicked off at the right time, was simple, didn't have any of the crashes and the concerns that a lot of us feared. And Paul will remember this from anyone that's joined us for previous sessions, that when the scheme was first launched, there was a lot of anticipation about how wrong it would go. And it seems, in truth, with hindsight, if it's gone wrong, it's gone wrong really from the point of view of fraud, and that it was too open to abuse at the time. But that is hopefully something that's being rectified now. Paul, you're going to say a bit more about the scheme, aren't you?
Yeah, well, I think in terms of the lockdown scheme, I guess, that it's interesting how it's starting on the the 1st of November. So for places like Liverpool, and other cities and areas that are on the verge of going into tier 3, it won't cover it won't cover what's happening now. But again, I guess these things take time to be put into place. The other thing available to businesses is the job retention bonus, which you may have heard about. And this is something that's been it's been announced for a while. It relates to a bonus that any business can claim back for an employee who was furloughed at any point and is on their payroll and not under notice as at the 31st of January next year. And for each employee that qualifies, the government will pay the employer £1,000, and that's just a payment to the employer, so you're not required to pass that on. You can keep that. There is a condition that the employee has to be paid at least £1,560 between the 6th of November and the 5th of February. So that's really to kind of cover off people just being kept on the books on 0 hours contracts or on next to no pay, and then the company picks up the bonus. So as long as you've met that threshold, you'll be able to claim. And when you claim is between the 15th of February and the 31st of March, that's the window. There's no detail as yet as to how it's going to happen, but no doubt it will be through some kind of portal on HMRC website, and further guidance is going to be released about that. There's something quite interesting about it in the guidance so far, which is that if you repaid any furlough pay, which I know I'm sure most didn't, but I think some businesses, they repaid because they ended up not being hit as bad as they thought, or for whatever reason. But if you repaid the furlough money, you can't claim the bonus. So yeah, so that takes you out. I don't think that's going to be something that affects too many people. I think my view on this is that it's not going to hurt for businesses, and I think it will be a welcome bit of cash. And obviously, the more employees you've got that you can claim for, the more you're going to get. But it's a kind of a bit gimmicky, really. I don't think it's the kind of thing that's going to really change a business's strategy or plans. It's just simply not enough. I think it's one where if it works for you and you've kept people on, and maybe people will be kept on until the 31st of January, if that's at all possible, it may extend a few people's employment. But I don't think it's going to sort of radically shift what businesses are doing. But it's money there, which if you've got employees that hit the criteria, then you can claim.
I agree. It's strange, whereas if you take the same bonus and imagine if it was £10,000, that would be just immense in its impact. £1,000, I think, barely touches the sides for most employers, and when it doesn't take a genius to do the maths in terms of making a redundancy now or hanging in there until at the end of January. As you say, it's gimmicky. It sounds good, but the truth is, it's just too little, and too little to make an impact, I think, in real terms.
Yeah.
So, Paul, I think that brings us to the end of the main content of what we wanted to talk about today.